Good morning, Advantage members. Happy November 1st. It's a new month, and it's about 7:20 a.m. my time. So I wanted to get started with a couple of things that I found interesting on my Twitter feed. Number one, this thread right here, just about, monthly volume by BTC based on different exchanges. I thought this was really cool as a metric. And then, of course, you have more detailed metrics about daily notional by futures and options and spot, which I found really fascinating that at the tail end of October, we saw a pretty big spike in the notional volume here created on pretty much all of the instruments, such as the futures and the options and the spot contracts. So that's kind of cool. Let me see here. I think all the other stuff, it didn't really intrigue me all that much. Options market share, this is also kind of cool. So basically you see a pretty decent spike that's been relatively consistent pretty much the entire year, especially April onward for options volume. And you can see October tapped almost 30%, which was kind of great, especially on Deribit. So now getting to the market, right? I think one thing that's definitely interesting to me in the market right now is this descending broadening wedge that's being created. And currently we're sitting right inside the October 30th weekly open. Okay. Right now, what we're going to do is we're going to map out a new monthly open because we do have a new monthly candle. So I'm going to throw this on right here. And that's our monthly open, right? It's close to $20,500. So that's November monthly open. We're going to remove this from the month. We'll add it here. I think that should be enough. Okay. What I'm going to do is I'm going to remove this September monthly open just because it's at such a very obvious level, which is $20,000. Like we know 20,000 is an important level. We don't need to be told why it's an important level, especially based on the September monthly. So we're going to remove that. And then I'm going to leave the October monthly open. We're now going to keep the November monthly open. And now we're paying attention to the October 30th weekly open, which is the nearest weekly open that we have, the most up-to-date weekly open. So what we can tell out of this is, price right now is just traversing between these 2 points, the November monthly open and the October 30th weekly open, right? I would probably say that if and when price smashes below the November monthly open, and if it starts rejecting this level, or let's just say it does something like this, doesn't even pull back to the November monthly open and then start selling off, I think this is probably the break that you want to be selling. Okay, so what I mean by that is, the break of the November monthly open, in my opinion, will probably cause somewhat of a unease in price action, and it will probably lead to more downside, quite possibly taking us back to the 20,000 even level, and maybe all the way down to 19.4, 19.5, which is the October monthly open. All right. On a daily basis, I've already spoken about this before. Let me actually go to this chart, which is a little bit easier to see on a daily basis. So I mentioned how this has been the big channel that's been capping price from November. We had crossed outside the channel for a few weeks right here in March through May, but then we dropped back down in the channel, rejected the channel, broke down, found support at the bottom of the channel, again, rejected the channel, sold off, again, rejected the channel, sold off, one more time, rejected, sold off. The fact that we've now broken outside, well, you kind of have to give BTC a little bit more credence here, right? Meaning more credence for more potential upside, more credence for the fact that it may not break back down inside the channel as easily. If we stretch this channel out further like this, I don't think that Bitcoin will as easily just nuke down. like to 14 or 15 or 16K. It will take probably some fundamental catalyst event from the macro picture or the Fed or war or some, crazy stuff like that to nuke BTC down back inside the channel. Because, again, you don't have to be ultra bearish all the time to recognize that this sideways price action that we spent almost a month and a half in a pretty tight range has kind of now looked like a potential reaccumulation, because we've now began our markup away from that level, right? Not to say that we've completely escaped it, right? It's not like we escaped it like this and we're moving up and away. We're pretty, darn close to that level. Even if we come back, I would say this range may still hold. This could be the range for another month, for all I know. And then we break out in November or December. But for the most part, I don't think that we'll just nuke down right away, unless, again, it's some big cataclysmic event, such as Russia-Ukraine situation accelerates, or China invades Taiwan, or the Fed says, hey guys, we're going to raise interest rate by 100 basis points next month. Or, again, we have this calendar that we're looking at, right? Where is it? This calendar right here. We know that we have the FOMC meeting coming up tomorrow. And then next week, we actually have CPI data coming out Tuesday. Well, these two events, and then of course, this Friday, we have the NFP, non-pharma payroll numbers, which are, again, important, labor change numbers. So these three different events are quite possibly going to cause some sort of shakiness, maybe some volatility in the markets. And, with those numbers in mind, right, with these events in mind, maybe you want to be a little bit more careful. So as of right now, if we're looking at the market, if anything, you should be looking at it from a level-to-level perspective, right? Like intraday trades. I'm not going to start talking about a new bull run or 10, 20% candles or anything like that, because it's just hard to kind of fathom that that's going to happen, especially given these events coming up. And especially given the fact that, we had this very nice 1.5 week spike right here, and we're sitting right at the highs into the FOMC event tomorrow, into the NFP numbers Friday. You could kind of see that gets me a little bit more paranoid, right? Or at minimum, if not paranoid, then cautious. I've talked about this before on my Twitter feed, and how I said that if we look at the market from the perspective of, some of the more stronger assets like Atom and ETH, or even Matic, for example, right? These have been, by far the three strongest assets. Atom, which is here. Okay, so here's how Atom is trading right now. Atom, since, let's just say 2 Fridays ago, has been trading, exceptionally well, especially in this local uptrend. It is now starting to crack that uptrend, but not fully broken. Fully broken for me is like, okay, breaks, maybe tries to push up, and then rolls away from this trend line. When it starts rolling away and then starts trending down, it's pretty much over, for this uptrend. For now, this is still iffy. Like anything can happen out of here. By today, when the US markets open in about 1 hour, this thing can spike back up, and then we can be, once again, range bound in this area, right? But for now, the cracks are being seen. And so what I was trying to illustrate is the next market move, in my opinion, for a continuation or a pullback will probably be decided by Atom and ETH, maybe Matic too. But you could kind of see, here's how Atom has looked pretty much, the second half of October. And most of October, it kind of, printed this very nice W bottom and squeezed up, right? Well, we've taken liquidity above this area. If it starts trading back down inside this 13.5 level, this horizontal level, well, then we're going to go back into a range, right? This is going to be, once again, a range right here. Okay. So obviously right now, Atom is showing cracks based on, like I said, this trend line. Now, what about Matic? Well, Matic has already kind of shown us that it has pretty much began its, a local distribution. It broke its local uptrend much earlier than Atom, and it's now going sideways. On a daily basis, Matic is already down, 4 red candles in a row, right? After taking out these highs up here. So from here, if we're looking for more downside for Matic, that could be this pivot right here around 86 cents or so. I think that's around maybe 7% move. I'm sorry, it's a 3% move, 3.6% move. Okay. And then finally, Ethereum, right? Again, Ethereum probably had one of the biggest moves of most alts the previous week. This move, as you can see, was a 16% move. From the low to the high, it was closer to 20%, right? So a 20% spike in ETH like that in a weekly candle is pretty massive because Ethereum is also a bigger market cap asset, right? So now the next level for ETH to be, paying attention to is just a key SR weekly level, which is 1420, right? That's about a 10% pullback from where we are right now. As you can see, this is kind of a key SR level across the board. It was, if you look very closely, if I map out why this level is important in a tighter manner, SR level right there, SR level right there, wick pushes up, retest wick right there, pushes up, 2 weekly candles that hovered right there, refused to close below. Then you print a lower high and then boom, break through it. Rejection multiple times right at that level, right? So point is, you may get this kind of pullback right here. And either that pullback means that from here, we're going to push up slightly and then break down, or the pullback is the solid buying opportunity where we're going to go straight up to 1950 and maybe even higher. I don't quite know which way is going to pan out. I know there's a lot of people saying they expect November to be bullish, or the rest of the year to be bullish. It's possible. I'm not going to fight it. Again, my goal right now is just to play the market level to level. I don't have a dog in the fight for bulls or bears. I think as of right now, yes, the market could give you, a local pullback, but doesn't necessarily mean that the market has to break down, in my opinion. Like, it's not like ETH has to top here and it has to go back to 1200 or 1300, right? I think it's reasonable to say, I don't know, maybe it ranges like this for a little bit. Okay, so that's how I'm looking at the market for now. I will say one thing that to me is very scary, and that is Doge. Okay, so I know people are looking for pretty much any excuse to look at, buying some of these assets or start calling for bottoms, or literally like any excuse to, get out of the mindset of the brutal downtrend that we've been in for the last, 10, 11 months. But the fact of the matter is, conditions are still tight in the US in terms of investment landscape, in terms of interest rate landscape. The labor market, in my opinion, is probably going to take a hit. The economy is probably going to take a little bit more of a hit, especially for the foreseeable, few quarters. I would probably say global economy as a whole is starting to show slowdowns. We're still dealing with the rampant issue of inflation, the Russia-Ukraine war. And again, I'm not trying to make excuses for why assets should go down. It is rather that these conditions are still persistent, and crypto is also coming off one of the biggest bubbles that it's ever had in 2020 and 21. And it really wasn't because of massive fundamental acceptance of crypto in the mainstream adoption. It was more so that there was just too much liquidity and too much money printed. So you kind of have to assume that that money to get weeded out of the system is going to take a while, right? It may take a long, long time, maybe another few quarters. And to me, Doge is the perfect example of how impatient the market is and how much it's almost dying to do anything at any point to, you know, to get involved in the market, to get long in the market, to call for a bull market. And so I believe that, if you kind of look at Doge right here with almost 120% extension only in the last, say, 7 or 8 days, I think this screams to me that, number one, this was probably a short squeeze. Number two, this is like getting buyers enticed right into, almost a pretty massive sort of like bull trap, right? Because it's not like Doge fundamentals change. It's not like the Doge chain is surprisingly getting way more users or volume or activity or anything. We're still in a crypto bear market, and crypto bear market in general just means that users are not willing to spend their money, get excited about products. And that is also because the broader economy, or, people are concerned about hanging on to their money rather than, gambling on dog coins, right? So I just wanted to let y'all know that, okay, well, if Doge, has already popped right here, it's not necessary that you have to just start shorting right away, though I do think that a short here is better than a long. I actually pointed this out here, right? Personally, I think Doge is topped, but again, it's not like I have a metric to show you that, because Doge can short squeeze another 50% for all I know, right? The short squeezing aspect has nothing to do with the Doge fundamentals. It's merely the fact that there's just insane people who are willing to buy it or squeeze it up to get more and more people to buy it at a higher price, right? So it's like, a mini short squeeze, almost like nested within a short squeeze Ponzi, which you do not want to just buy into spontaneously. However, if you do want to say, buy a pullback after FOMC or after these events have cleared, because you think that, oh, well, Doge comes back to maybe the yearly view up right here around 10 or 11 cents, and it's just, starting to grind up, well, then this is a better buy than now, right? And if you buy here, well, then, your stop could be 10, 20% down here. Take this trade back to 14, which is like a nice, 20, 30% pump. And then you could take the trade back to 19 or 20 cents, which will be, somewhere around these highs up here. Okay, so that's one way to look at it. But again, Doge pumping is, in my opinion, concerning. Okay, stocks, you can kind of see the ES very nicely popped up overnight, took out yesterday's high. We have yet to open the stock market. So, the stock market trading hours are not open yet. We don't know how that's going to pan out, but we'll see. We'll see if buyers are interested in further pushing up the price, or we're going to start, a breakdown headed into FOMC. I'm really not sure. That's why I'm kind of just like sitting tight and waiting. I don't really have a dog in the fight other than a small Doge trade that I took. I entered yesterday as a short, entry 13. Obviously, I'm a little bit underwater right now, but I'm not super concerned about it. I personally think that this will pan out. It'll take a while. Okay. All right, everybody. That's pretty much it. Nothing else I'm paying attention to. Obviously, Sushi is another asset that you want to be watching. Yeah, Sushi had some pretty big breakdown days, 7% 2 days back, yesterday, 6%. Now kind of sitting above this 160-ish level. If you want to be a buyer here, your stop, in my opinion, has to be below today's daily low, right? Today's daily low, in my opinion, is probably a better stop, just in case it, just nukes down further. Cool. So we talked about Matic, we talked about ETH. I do know that AVAX also popped up a decent amount the past few days. Personally, I don't think AVAX has shown us enough strength consistently. I think it has these random pops. And as soon as it has these pops, buyers are interested right at the highs. And so in my opinion, as a market overall, looks like it's bid less, meaning, you can kind of see BTC is kind of grinding around this area, waiting possibly for the FOMC, the NFP numbers and all that. You could see strong assets like Matic having a bit of a pullback, Atom having a bit of a pullback. Ethereum having a bit of a pullback. I think it's better to not be interested in AVAX right at the highs from a long perspective. But in my opinion, I think it's better to look at this from a short perspective with the ability to add short a little bit higher. All these assets, by the way, as I mentioned, Atom and Matic and ETH, keep a cushion of like, plus or minus like 4 to 5% for these assets to swing, just because the market itself has gotten very, very thin and illiquid. And one of the ways I illustrated this yesterday was, if you look at something simple as Amazon, which is like, $1.2 trillion stock, Amazon dropped like, 20% or something in the past week. That is a massive move. These kinds of moves do not happen in regular market conditions. That means like the market is very concerned, very illiquid as it is. The same thing with Meta, right? Meta dropped, almost 25-30% in the span of a week or so. Again, that's another, $300-400 billion stock, which moved, almost wiped off like 20 or 40 billion, in the span of a week. Right. So these are very big concerning signs from the liquidity standpoint. And I can guarantee you that this liquidity or lack of it is definitely being pressed into crypto. Okay. There is no way a crypto market will retain its liquidity as big tech like this looks as it does right now. I don't buy it. I don't buy it at all. Okay. So again, reasons to be concerned. But, for now, like I said, focus on high risk scalp positions, levels of level. That's all I'll be watching. Opportunities where everybody's getting bullish into one of the most silliest rallies, in my opinion. I think it's better to fade people like, like that, where they start wanting to buy or talk about Doge bull market or, Elon or random stuff, because they don't have no idea why something went up. And so the natural instinct is to want to be, a buyer of something, especially in the bear market, because you're just suffering for the last 10 or 11 months, right? You're just looking for a way to make money. So just be cautious. Okay. All right. Check out this mini, post. I posted this on my Twitter feed as well. I think y'all will like it. Just about, top signals regarding FOMC, and specifically Ethereum. Okay. Let me see here. All right. Well, I think that's really about it. That's all I got, folks. Okay. Other assets, by the way, I just want to quickly mention, I personally think Solana and Near are probably better shorts than longs. But again, keep that cushion in mind, like I mentioned, right? That plus 5%, plus or minus 5% cushion, because these things can squeeze up and down quite rapidly due to the illiquid conditions that I mentioned earlier. Okay. All right. That's it. Thank you, everybody, for watching. I hope y'all enjoyed this video. Take care, and we'll chat soon. Okay. Cheers.